Hey everyone, welcome back to the Mark Loeffler Experience. Today we're going to be analyzing a 328 unit building in Atlanta, Georgia with Jose and Khadija Jafferji. I'm so excited to be doing this. I never get to analyze properties this big, and these guys are doing it and living it, and man, it is amazing what they're doing. And to Jose's point, he's going to talk about this later in the video. He's analyzing 2 to 4 deals a week down there. How many buildings or properties are you analyzing every week to hone your skills and to get better and to find your great deals? Because you're not going to get it doing it with one. All right, guys, let's jump in. Jose and Khadija, thank you so much for coming. We really appreciate it. Let's analyze a 328 unit building. Boom. Welcome again. And let's talk. 324 units in Atlanta, Georgia. How do you go from buying 12 plexes on the mountain or 20 units? I don't even remember your last one. I know it was a multi-unit on the mountain. How do we go from that to buying 324 units in Atlanta?
Yeah, you know what? We didn't search to buy that big of a property. It just, the opportunity presented itself. We went ahead with it.
Obviously, we were looking to change markets, right? If you're like me, the Southwestern Ontario market's kind of insane. It's hard to buy stuff right now. Is that why you guys went and looked in the States, or?
Exactly what you said. We were just like everybody else. We were buying. We started out as small investors buying, duplexes, triplexes. We worked our way into the multifamily market here in Ontario.
I sold Jose's first one on Erie Avenue.
Yeah, that's right. Yeah. So, we were at this point where we were buying multifamily and we were enjoying it. We were doing the BRRRR strategy on our buildings, and we got to a point where obviously the market just went bananas, right? And, Jose, he's kind of the visionary of the business. He does see things coming before they come almost. So he had been telling me for a while, like, hey, listen, I think we're going to run into some problems with the market here. It's going bananas. It's going to continue to be bananas. The numbers don't make sense, right? We're offering on a building at a 4 cap and the building's selling at a 3, right?
Mm-hmm. So I was buying those 3 caps and I was happy I did in the last couple of years, but
if you're an investor looking at, the numbers and trying to offer based on the numbers, a lot of times here, it's not making sense anymore. So anyway, we started looking at alternate markets. And if we're going to go outside of Ontario, right, our thought process was, if it's not drivable from our home, then it could be anywhere, whether it's East Coast, West Coast, and down south. So we started exploring the option of making our way into the US. And that's sort of where our journey began. And Jose can speak to that a little bit more about how we got involved with, you do need boots on the ground wherever you're investing if it's not drivable, walkable from your house. So building out that team and understanding how we were going to position ourselves so that we could start buying down south.
So what markets did you focus on down there? Obviously Atlanta, because you bought something. What other markets were you looking at?
Yeah,
or are you still looking at?
Primarily focused in 3 different states, Georgia, and in Georgia, primarily just Atlanta and the surrounding areas, they call the MSA, as well as Dallas and in Florida. Florida, I'm looking pretty much mostly just in the Jacksonville area, Jacksonville, Tampa corridor, but I'll be open to deals in other places as well. And primarily, if I'm not going to be looking at Miami or Orlando, it's just too pricey.
All right. So why did you choose those 3 cities or states?
The southeast part of the U.S. is where all the growth is happening. We've got, especially after the pandemic, there's been a lot of population increase in these states. People are moving out of New York and California and going into, Phoenix side. They're moving into Florida and to Georgia just because it's more affordable. Now they can work from home. So it gives them a lot of options.
Yeah, for sure.
And the weather is better too.
Yeah, well, it's nice to go down, check on your buildings and bring your bathing suit, I guess.
That's right. Yeah.
Yeah.
That was one of my motivating factors to go down to the U.S. because, in the next 10 years, I want to go down and visit my properties. I would rather go to a warmer place you know, so I
Then
decided
do what I did and went to a colder place in Edmonton.
Yeah.
Exactly. Yeah, no. So we've been toggling with the idea of getting a second home in Florida, or, you know, we haven't really decided, but that was always a personal motivator to go down there, because it was like, hey, that's perfect. Like, make a trip down south, check up on things, do business as well. The idea sits well with us. We like the idea of living somewhere warm at least part of the year.
Yeah, fair. How long have you been looking down there?
You know, so going back to 2009, I bought my first property in the US back
Okay.
then. But that was just buying, like, I bought a couple of duplexes. You know, I knew kind of how the cross-border taxation worked and things like that, so I wasn't afraid. So over the last, I would say, year and a half to 2 years, especially after the pandemic, I started looking a little bit more heavily, and primarily just building connections and networking with you know, local operators there to make something work. Primarily, it's just been networking, and that has got me so far this year.
So how many properties do you own in the States right now?
Yeah, so in the States, that portfolio of 328 units is actually composed of two separate complexes, and which are about 1 kilometer away.
But one
Yeah, but you said you started investing in 2009. How many
Yeah.
deals have you guys done since 2009 down there? Even small or?
Yeah, so that one, at that time, we had 4 properties, and then but those were like duplexes.
Yeah, so it's a relatively big jump.
Yeah.
Oh yeah.
For sure.
Yeah,
Yeah,
we
huge
sold
jump.
those. That was all way back then. I mean, we did our piece there, and we moved out of there.
Oh, you bought like in like the dip down there
Yeah.
after 0809.
Exactly. Yeah. So
Yeah.
we bought like basically foreclosures,
Yeah.
and, you know, and from wholesalers, rehab those and rented those out for a couple of years. Apartment investing came from the idea of syndications, right? So
Yep.
syndications, basically, what that means is it's a group investment, almost kind of like crowdfunding. The model is you're getting is an LPGP model.
So with that, are you the principal investor or are you just raising money? Like, are you part of a group? How does that working?
Yeah, so I'm a part of the GP team.
Okay.
So I'm not the Atlanta deal was specifically wasn't a deal that I found.
Okay.
I became part of that opportunity, help raise capital from Canadian and American investors on that one.
Let's just talk numbers on a 328 unit building then.
Yeah, sure.
Jose and Khadija, now we're going to go through the property analyzer. And guys, if you guys want the property analyzer, I know whenever I put it up, you guys ask, there's a join button. You can join the private membership and you get the property analyzer and you can throw questions at me in there. But if you guys want, hit the join button and it'll take you there. All right. So let's go through the numbers. What's the purchase price of a 328 unit building in Atlanta?
So this one we got it at 98,000 a unit. So it was like
What's that roughly?
$32 million.
$32 million. And on a $32 million building in Atlanta, what's your financing look like on that?
We got 80% loan to value, loan to cost actually.
Loan to purchase. Okay.
So we actually we have about we're spending around $2 million in as our capex budget.
Okay, so immediate repairs and rentals, 2 million.
These are very high level numbers.
No land transfer tax there, right?
No, for sure.
Isn't that
Just saying.
awesome?
Yeah.
Imagine the land transfer tax on 32 million, right?
I wouldn't mind paying it here if I could find the right building. Let's be honest. All right. Inspection cost
Was 10,000.
10,000. All right, that's actually pretty cheap. Appraisal cost
7,500.
Did you have to get a survey?
Yes. I think it was let's put it 2,500 or so.
Okay. What was your financing costs on that?
Yeah, it's 1% the loan.
0.1. There we go. 256,000. What's your legal costs?
Let's see, ballpark around 15,000.
50,000. Yep.
15.
15. Okay.
Yeah.
Any other do you guys take an acquisition cost or anything like that
Yes.
fee? Yep.
Yeah, we had a 2% acquisition fee.
2% acquisition fee. So basically you're raising almost $9.5 million.
That's correct. Yeah, exactly what it is.
Yep. Okay. On the 328 unit building, what's your current gross rents?
It's been a while, so I'll have to, I'm ballparking it at the average rents was around 925.
Times 925. So right around 3.6 million a year. Okay. Do you have any laundry revenue or parking revenue?
Yeah, no parking, but laundry. Let's do about $20 per unit.
Yeah, again, 328 times 20. So it should be 6,500. Yeah, a month. All right. Now we get into the operational expenses. What's your heating cost down there?
Heating costs is not that much.
I'd imagine. So is it forced air down there? Is it electric heat or?
Yeah, it is forced air.
Okay.
There's actually AC unit per one. Like just the way it looks here is an AC unit per apartment. So it's a garden style apartment, a 2-story mixture of basically 50% one bedrooms and 50% twos. It's all paid by the tenants anyways.
Oh, okay. So then you don't
Yeah.
even need to worry. And you have no common areas?
No common areas.
Oh, okay. So you have no heating, you have no hydro, and do the tenants pay water as well?
It would be probably something similar to what we're here.
So about $50 a month per. So $50 a month times 328. So about 16,000 a month,
Yeah.
which on, $310,000 income, it's not that bad. What are your property taxes like down there?
Property tax on this was around 450,000.
How about insurance on something like this down there?
Insurance is very similar, about $500 a month per unit. Sorry, 500 per unit.
Per year, yeah.
Yeah.
Okay, so what are you paying your manager?
3%.
3%. Yes. Obviously, the bigger you go, the less you pay. What's your budget for repairs and maintenance? You guys use 5% there?
Yeah, repair. Yes, same thing.
Yep. All right. Resident manager?
Yeah, that we do have put in about $100,000 for that.
All right.
There's a site leasing office with 2 staff in it.
Any rentals, laundry rentals,
No.
anything like that? Anything else we should
It's not as
include?
common over there to have
Coin up?
water rentals.
Oh, yeah, that's true too. What's your vacancy rate like in Atlanta right now?
We are at about 5%.
I use 8% in Edmonton when I run my numbers. I do like to go a little high, but so your first mortgage, you got obviously 80%. What was your loan to value on, or what was your rate on that?
I was 375.
At a 30 year or 25?
No, so this is a interest only loan.
Okay, perfect. That saves you some money. That saves you 50 grand a month. You bought a 328 unit building in Atlanta at a 7.32 cap.
Well, there's probably some other additional stuff that we're missing.
Okay.
It was around a 5 cap.
It was around a 5 cap. Okay.
Yeah.
So, but I'm sure like $925 a month.
And there's huge upside to it because we're, after renovations, we're only budgeting around 7,000 per unit. And that's going to give us about a $250 lift.
And I'm assuming a 5 cap when you guys are done, right? So if you get $250 a month lift, you're basically going to get this up to, let's call it $1,250, or let's call it 1,200. Like what's the exit on this? Like 50 million ish?
So we actually got an appraisal done. It's, we after repair appraisal, and it came in at 42 million.
42 million. So you bought it for 32. You're going to put $2,000 into repairing and fixing it, and you're going to be worth $42,000 after. So you can have $8 million in equity. So basically, this is a full burr on a 328 unit building.
Yeah, and our plan is to do it in 3 years. Refinance in 3 years. We're paying our investors back approximately 85% of their capital invested back in 3 years, and then we at that point we'll either decide to not refinance and sell if the market is really good. It depends on the at that time what the market looks like, but our plan is to definitely refinance and keep it for another 2 to 3 years more.
Nice. And then if the market goes stupid, then you just go ahead and
then we will probably likely sell it. and look for another opportunity.
If you don't mind me asking, what's the address on it?
Yeah, it's, if you go on Google, it's 1890 Adams House.
Adams House Apartments, Campbellton Road.
Correct. Yeah. So the location is kind of a gentrifying location. Is South Atlanta, pretty close, about 20 minutes from the airport. And if people don't know, the Atlanta airport is one of the busiest airports in the world. So it's got a lot of logistics, companies, warehousing, Amazon, Porsche, Coca-Cola, all located, headquartered in Atlanta. UPS.
Wow. All right, guys. Well, this is amazing, man. Like, I love this. I love people who win,
We got to a point in our business where we wanted to be able to help other investors as well, or bring them in on our deals. And in Ontario, it was challenging for us to be able to do that, right?
Mhm.
Because that cash flow is tight already.
Yeah.
And then with the BRRRR strategy, investors are just literally waiting on some kind of equity payout rather than being able to sort of carry themselves through the deal. Whereas this deal was so attractive because it made sense. It made sense for us. It made sense for the people we brought in. It made logical sense in our business and what sort of our why was at this point, right? Like, we've accumulated all these doors in Ontario. We're doing this thing. How can we bring other people in on our deals? How can we do bigger deals? With this first deal, a lot of our warm leads, right, came through and also invested with us. And a lot of them were pretty excited. Like, they were like, yeah, we've been wanting to invest in real estate. We've wanting to get into the market. Like, this is great. And we just see the business growing with this exact same philosophy. Like, we're going to be able to put together these amazing deals. We're going to be able to, do what we love to do. We're put in some of our own capital too, and bring in other people to sort of, win as well. Cause you can see the numbers are phenomenal, right? And especially Jose spends a ton of his time screening deals, underwriting deals, looking for these amazing deals, going to the US and networking with brokers and building out these teams. So, I mean, that's really the vision for the business, is to be able to do more and more of this and bring in investors, especially Canadian investors.
And I think you just touched on a really key point. I think everybody expects that they're going to analyze one deal and then bam, that's it. They don't understand that we sit there and analyze, I analyze probably 10, 15, maybe 20 buildings for every one that I buy. It's just that I've got to the point where I can do it in a minute or two because I just slap it on the spreadsheet and look at a few pictures and say, meh, or, hey, that looks really good. Let's actually paper that and then I'll come see it, right?
Yeah, exactly. No, and like what she was mentioning, the returns are really, really good. It's hard to beat. You getting an equity position as an investor, as well as a very, very strong cash flow, kind of the best of both worlds. Luckily we got this property in November 20, or actually some month before, 2021. So we locked in at a great price. Since then, I would say, things are trading for a lot higher in that same area.
Yeah.
Which has happened pretty much everywhere. The returns is what attracted the investors.
Well,
it wasn't a hard sell.
The returns do attract the investors, but it's also the vision, right? And you had the vision to go down and start looking and determine your markets and grow your team. And, that's massive, right? And I love seeing that, guys. I really do. I really appreciate it. I appreciate you guys coming on. I mean, I don't get to analyze many 328 unit buildings. Maybe I got to fly down to the US more.
You should come down to Florida. We'll all go to Florida and look at some buildings.
All right, sold. You just tell me when. All right, hey guys, if everybody wants to see me analyze some Florida buildings, comment down below. If you think we should all just take a road trip, the Mark Loeffler Experience road trip, comment down below if you're in. Thanks so much for coming on. Any last parting words for the Mark Loeffler Experience group here?
Kudos to you for providing such great value to your listeners. Doing an awesome job.
Yeah, right. And for those listeners, I mean, really, whether you're going to invest actively or passively, like this is passive, you can do active stuff. Just take some action. The market is there's still money to be made. There's still opportunities to be had. I think that I may be biased, but real estate is vehicle really for growing wealth. Yeah, just do it.
Totally agree. Totally
Yeah.
agree. How do people reach you guys?
Yeah, you can reach us on our website, savvyrealestate.ca. We just dropped our new podcast, so the Savvy Real Estate Investors Show on iTunes. Mark's actually going to be on our show, so wait for it. It's going to come out in maybe 6-8 weeks. And yeah, we're on Instagram, Facebook. You know, you can find us.
Yeah, we'll post some links below.
All right, awesome.
All right, guys.
Thanks, Mark.